Welcome to my $100,000 stock experiment, Sell Rules, episode number 6. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase any stocks that I've bought, nor is it an endorsement to purchase stocks in general. I started learning about stocks when I joined a women's investment group about 15 years ago. I was in that for many years, left for a few years, and then got back into it. The great thing about that group was there was a woman, Susan, who religiously read the Monday edition of the Investor's Business Daily newspaper, and it had a list of stocks in it called the IBD 100. And we, as a group, typically picked our stocks from that group. And that got me hooked on this style of investing, the IBD style of investing called Can Slim. And I have been reading the weekly paper and also subscribing to the digital edition since then. More recently, joined some IBD meetups, and that's a great way to learn and hear what other people are doing. And a lot of the people in the group subscribe to MarketSmith, which is a premium IBD product that is on advanced chart reading. And I love charts, and so I got that product and love that. The other thing that you should be doing if you're wanting to invest is get some books on investing. And this book that I'm showing here, The Successful Investor, that book I read recently. It's not too thick, it's a quick read, and it has a lot of good tips on investing. So if you're interested, I suggest you pick that up or another one of these. William O'Neill, founder of the Investor's Business Daily guy, one of his other books, and start reading about this style of investing. The IBD has tracks the general market, and it has three categories: confirmed uptrend when the market's doing well, and that's when it suggests that you purchase stocks; the uptrend under pressure when things are starting to look a little uneasy in the market, but it's not a total red flag; and then market incorrection when you should not be purchasing stock according to the IBD rules. The market moved into the uptrend under pressure at the end of week 12, which prompted me to have a closer examination of my stocks. I sold stocks a little sooner than I would have sold them before, and I got rid of my one big loser that I missed selling last week. Let's review my current sell rules. First of all, I hold a stock for 8 weeks. That is, of course, unless the stock goes down 8% below my purchase price. If it does that, then I sell it. After the 8-week time period, I look and see if the stock has gained 8%. If it has, then I keep it. If it hasn't, then I sell it. After that period, I would like a stock to be gaining at least 1% a week. So I'm looking for stocks that are maintaining that. They may not reach it every week, but on average, I want them to be gaining at least 1% per week. Any stock that drops below the 50-day moving average, I definitely need to sell it. And what I'm really trying to do is find the sweet spot between the 10 and 25-day moving average where I can get out of a stock before it drops even further. I sold 3 stocks in week 12. Red Hat, I should have sold the week before, and I lost more than twice what my loss limit was. So that was really a mistake on my part. And the other 2 stocks I sold, INXN, it really was showing up on my All Holdings weekly chart as needing to be sold. It had 2 weeks that were uh, losses on 6/15 and 6/22, and then it had another loss the week of 6/29. So that one I sold and lost $570. And the Novarta, I took a small profit in, but that one I should have also sold before. So I'm going to show the charts, and I'm learning hopefully you're learning too to not make my same mistakes, but I'm identifying on the charts where I think that I should have been selling, and then I'm going to look for those points in the future so I can make better sell decisions. This is a red hat chart, daily chart that I've annotated for you. The time period here is from May 1st to July 5th. That is a week before and a week after I purchased it. I just wanted to get the chart a little bit wider so you could see what was going on there. The prices along the top are on the day that I sold it on 6/28, and the dot is, I think that's the closing price that it's giving you there. So I've added a dashed green bar across towards the top. That's where I bought it. And the dashed red bar down at the bottom is where I sold the stock. The purchase date is highlighted in the orange bars up on the top left-hand side. You can see where I purchased it, and down on the right-hand side, you can see where I sold it. As I've said before, I'm trying to refine my sell rules, and to me, I think the perfect time to sell would have been in that blue box at the top when that green 10-day moving average line started to decline. You can also see the 25-day moving average also move down at that point. So hopefully in the future, I can learn from this big loss. I took probably around 16% loss on this stock, which was way more than I wanted to with my sell rules, but I made a mistake, missed it, and hopefully I can learn from this and do better on my next trade. I also sold Novanta on June 28th, and I did make a slight profit in this, but as you can see by that blue bar at the top, if I would have sold when it started to uh, the 10-day moving average started to decline, or even when it hit the 25-day moving average, which is the pink bar, then I would have made more of a profit. So I really need to be paying attention to those two top lines, the green one and the pink one, and not wait for a stock to get down to the red 50-day moving average or even below it, as it happened in this case. The third stock I sold this week is Interaxon Holdings, INXN. You can see again where the blue boxes are that I'm indicating that I think I should be selling, where the 10-day moving average is starting to decline. The first blue box on the left, it actually crosses the 25-day moving average, which is not a good sign at all. That means it's declining in its upward trend. And it did recover a few weeks later, and then I had another sell point, which I did not sell, and then I ended up selling it down below the 25-day and 50-day moving average for a loss. And I think I lost about 5.7% on this stock. I sold 3 stocks this week, so I have 7 left in my portfolio, and here's a bar chart showing the holdings. As you can see in the middle, the pink Tandem is my superstar stock, and it went down a little bit for this week, but it is still outperforming everything else. The Veronis also went down a little bit this week, so I'm keeping an eye on Veronis and HQY, Health Equity Group, which also went down. Weight Watchers is holding its own, and the other 3 I've only had 3 weeks. 2 of them 3 weeks and 1 of them 2 weeks. The week ending June 29th was a really rough week in the market, at least for my stocks. I did sell those 3, and the 7 I have left did not perform very well. The ones, you can see that on column on the right, dated 6/29. I've sorted it in order of loss in this case because six of the seven stocks went down this week. So I'm going to hold these right now and take a look at how the stocks are performing next week. The portfolio went down a bit this week. It's lost 2 weeks worth of profits in there and ended up at 119, 179. So an increase in 12 weeks of 19%. Pretty good. I'm happy with it. The benchmark of the S&P 500 also went down as well. So it seemed to be a down time for stocks in general. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel.